Welcome to the deep dive. We're really thrilled to have you with us today.
Absolutely. Glad to be here diving into this one.
Yeah, because if you've been paying even the slightest bit of attention to financial news lately, or just technology trends in general, you know that artificial intelligence is, well, it's the absolute biggest buzzword out there.
Without a doubt, it's everywhere.
Right. It feels like every single company is rushing to slap the letters A and I onto their products, basically just hoping to watch their stock prices soar.
A lot of superficial hype.
Exactly. But as someone who likes to look past that hype, you have to ask yourself, how much of this is actually real? So today, our mission is to cut straight through that noise.
And we have the perfect case study for it.
We do. We're taking a comprehensive look at a stack of investment analyses and financial projections surrounding one specific company that has positioned itself right at the absolute center of the storm, Palantir Technologies.
Yep, Palantir.
We're going to dig into the underlying numbers, the actual dollars and cents, to see if the reality of their business matches this immense market hype.
Because the real story, buried in the source material we've gathered today, it isn't just about a stock chart going up or down.
Right.
We're really looking at a fundamental seismic shift in how enterprise AI is actually being sold, how it's adopted and integrated into the global economy.
It's a massive transition.
It really is. For the last couple of years, the world has been captivated by theoretical AI, the kind of stuff that looks like magic in a heavily edited tech demo.
Or a chatbot generating poetry, right?
Exactly. But what the data on Palantir shows is the transition to applied operational AI. This is the heavy lifting technology that major corporations and governments are willing to pay billions of dollars for.
Because it actually changes how their businesses function on a daily basis.
Precisely.
So let's start right there with the big picture from their Q4 2025 earnings report. Because the numbers in this fundamental analysis are, frankly, they're jaw-dropping.
They really stood out.
Palantir reported fourth quarter revenue growth of 70% year over year.
70%.
Yeah, 70%. And the sources are very careful to emphasize that this isn't just some one-off lucky spike because they, happened to close one massive contract at the end of the year.
Right, it's a trend.
A huge trend. This marks their 10th consecutive quarter of accelerating revenue. And for the full year of 2025, their revenue hit $3.9 billion.
Which is incredible at that scale.
It is. Usually, the law of large numbers dictates that as a company gets bigger, its percentage growth has to slow down. But they are somehow doing the exact opposite.
And the reason they're defying the law of large numbers is really the core narrative of this entire analysis.
Let's unpack that.
Well, for the longest time, Palantir had a very specific, almost pigeonholed reputation.
They were the secretive government contractor.
Exactly. They were known almost exclusively for that. Their bread and butter was working with intelligence agencies, the defense sector, the military.
The CIA, the NSA.
Right. And historically, bridging the gap from building bespoke tools for counterterrorism to selling software to mainstream corporate America that's notoriously difficult.
Oh, I'd imagine. It's a completely different culture.
A totally different culture and a totally different sales motion. But when you look at the breakdown of these Q4 numbers, their U.S. commercial revenue accelerated by a staggering 137% year over year.
137% growth in the commercial sector alone.
Yes.
That tells you they aren't just dipping their toes into the corporate world. They're kicking the door down and completely shedding that old limiting reputation.
And doing incredibly fast.
And what's wild to me is that they don't see this momentum slowing down anytime soon. The forward-looking guidance they issued is just turning heads all over Wall Street.
The 2026 numbers.
Yeah. For the full year of 2026, Palantir is guiding for 61% revenue growth, targeting between $5.5 and $6.0 billion.
Which is massive.
To put that in perspective for you, the consensus estimate among Wall Street analysts was only 43% growth.
Then they crushed it.
Palantir didn't just beat the estimate, they completely blew it out of the water.
But top-line growth is only half the equation here. It's crucial to understand the financial health underlying that revenue.
Right, because growing rapidly is easy if you're just burning through cash to acquire customers.
Exactly. Doing it profitably is the real challenge in tech. And the analysis points out their earnings per share expanded to 85 cents. Plus, they are boasting operating margins of over 55%.
Let's translate operating margins for a second just to make sure we're all on the same page.
Sure.
That basically means for every dollar of revenue Palantir brings in, after paying all the immediate costs to build and deliver the software, they are keeping 55 cents as profit,
That's
right?
the practical takeaway, yes.
Yeah.
It demonstrates an incredibly efficient, highly scalable business model.
55 cents on the dollar is huge.
It is. But the metric that truly stands out in the investment analysis, the one that analysts absolutely obsess over in the software industry, is net revenue retention, or NRR.
Okay, NRR.
In Q4 of 2025, Palantir's NRR hit 139%, and that was up from 134% in the third quarter.
We hear NRR thrown around a lot in these tech analyses. Just to anchor us, what does 139% net revenue retention actually look like in practice for a company?
So it measures how much revenue you are keeping and growing from your existing customer base,
Yeah.
completely ignoring any brand new customers you signed up this year.
Okay, so just the existing clients.
Right. Imagine a specific group of companies spent $100 with Palantir last year. That exact same group of companies is now spending $139 with them this year.
Wow.
It means that once a corporation starts using Palantir software, they don't just quietly renew their annual contract, they aggressively expand their usage.
They realize the value and buy more.
Exactly. They buy more licenses, they roll the platform out to completely different departments, and they deepen their operational reliance on it.
And you mentioned earlier they still have that government revenue too.
Yes. When you combine that aggressive commercial expansion with the fact that their legacy U.S. government side remains a highly stable, high-margin cash cow.
I think the source said surging to roughly $570 million in Q3 alone.
Yes, roughly $570 million. So you are looking at a tremendously powerful financial engine firing on all cylinders.
That actually brings up a fascinating question for me. Whenever you see a company pulling off a 137% growth rate in a relatively new sector and getting their existing clients to increase their spending by nearly 40% year over year, you have to ask, how are they actually doing it?
The sales strategy.
Right. We know enterprise software sales are notoriously brutal. Usually it involves a 6-month bake-off between competitors, endless PowerPoint presentations.
Golf games, steak dinners.
Exactly, and agonizingly slow proof-of-concept trials that tie up the IT department for weeks. What is Palantir doing differently to bypass all of that friction?
The secret lies in their artificial intelligence platform, which is universally referred to as AIP. And more importantly, the radical way they are selling it to corporations. Palantir has pioneered what they call the bootcamp sales model. They have essentially thrown the traditional, lengthy software pitch right out the window.
So no more PowerPoints.
No more PowerPoints. Instead, they invite a prospective client to a bootcamp. They take that client's actual, messy, siloed, real-world data, integrate it securely into the AIP system, and literally build and deploy a working, customized AI solution for them in a matter of days.
I absolutely love that approach. It's like you're looking to buy a new car, and instead of the salesperson sitting you down at a desk to hand you a glossy brochure with some theoretical specs,
They just toss you the keys.
they just toss you the keys to a car that they've already custom tuned for your exact daily commute, and they say, just drive it to work this week and see how it feels.
That's exactly it.
It completely eliminates the leap of faith. You aren't buying a promise of what the software might do in 6 months. You are buying a product that is already solving your problems right in front of your eyes.
The test drive analogy perfectly captures why this is working so well. It drastically shortens the sales cycle from months to days.
Which explains the massive commercial growth.
It does. But from an investment standpoint, the bootcamp model does something even more valuable. It establishes an incredibly deep economic moat around Palantir's business.
A moat. How so?
Well, once a major corporation goes through that bootcamp and sees AIP seamlessly integrating data from their supply chain, their HR department, their financial software, the switching costs become astronomically high.
Oh, I see. Because to rip Palantir out of your company, you would have to untangle all of those complex data integrations and start completely from scratch.
Exactly.
And you'd have to find a competitor who can actually handle that level of complexity securely, which brings us right back to their roots, doesn't it?
It does. Their foundational history is their biggest asset here. This is a company that built its core architecture working directly with the CIA, the NSA, and NATO.
The highest levels of security on the planet.
We are talking about government-grade security. If you're a massive hospital network handling highly sensitive patient data, or a major bank navigating a minefield of financial regulations, that security lineage provides a massive foundation of trust.
It's almost funny to think about technology originally designed to track complex geopolitical threats now being deployed to optimize a Midwestern bank's payroll system.
Or a retail chain's warehouse inventory.
Right? But clearly, the corporate world is buying it.
They are buying it because generic, off-the-shelf AI chatbots simply cannot be trusted with that level of sensitive enterprise data.
That makes total sense.
And we're also seeing Palantir lean into this advantage with strategic moves, like their recently announced partnership with Rackspace.
What's the goal with the Rackspace partnership?
That partnership is specifically targeted at expanding their reach into those heavily regulated industries by offering secure, enterprise-specific AI solutions that are ready to deploy out of the box.
Okay, so let's summarize where we are. We have explosive fundamental numbers, a brilliant show-don't-tell sales strategy with these boot camps, and a widening competitive moat protected by government-grade security.
A very strong foundation.
Naturally, you'd think the stock is on a straight line to the moon. But looking at the price action and sentiment analysis from our sources, the market reality is a lot more complicated.
It always is.
Palantir's stock is currently trading at $135.68. It has been a totally wild ride. It's up 144% over the last year, which is phenomenal. But it recently suffered a pretty steep 35% decline from its absolute peaks.
A significant drop.
Yeah. What caused that massive 35% drop?
The sources point out that the 35% pullback wasn't driven by a sudden flaw in Palantir's business model. It wasn't a bad earnings report either.
Okay.
It was actually driven by broader macroeconomic weakness sweeping across the entire technology sector. During that period, the Nasdaq index was hovering near 23,238.
So the whole market was feeling it.
Right. And when macroeconomic pressures hit the market, things like shifting interest rates or inflation fears, high-growth tech stocks are universally the first to experience a violent sell-off. Investors panic and pull their money out of aggressive growth companies.
Flight to safety.
Exactly. However, technical analysts are interpreting this specific pullback for Palantir not as a long-term collapse, but as a basing pattern.
Wait, a basing pattern. For those of us who don't spend our mornings reading stock charts and technical analysis, does that basically mean the stock has stopped free falling and is building a solid floor of support?
That is exactly the concept. The psychological support at these recent lows is holding firm, and momentum is slowly building back up.
So the floor is set.
Yes, and the big institutional players, the major banks and funds, are taking notice of this floor. We are seeing some major upgrades roll in.
Who's upgrading them?
UBS recently upgraded the stock to a buy rating with a target price of $180 in late February 2026. And Citi is even more bullish, putting a target of $235 on the stock for 2026. Let me do the quick math on that. If it's currently trading around $135, a target of $180 to $235 implies a massive upside potential. That's ranging anywhere from roughly 38% to over 87%.
A huge projected gain.
They clearly see their recent 35% drop as a temporary discount.
They are analyzing the long-term software spending boom and concluding that Palantir's current price offers a highly attractive entry point before the next wave of growth.
It's always fascinating to look at the contrast between how the massive institutional banks are playing a stock versus the retail investors at home.
Very different approaches.
Yeah. The sentiment analysis in our sources notes that retail investors are buzzing about Palantir on platforms like X and Reddit on a weekly, almost daily basis. They are discussing it with the same reverence as the hardware giants like NVIDIA and AMD.
They see it as an AI darling.
But it's not universally euphoric across the board.
Yeah.
The sources mention Jim Cramer's take on the situation.
Always a polarizing figure, definitely. He calls Palantir a very long-term hold, which sounds great, but he also explicitly warned that the stock got ahead of itself recently. It really captures the tension between extreme retail enthusiasm and the cautious optimism of TV pundits.
It does.
But I'm actually more curious about the people inside the building. What is the sentiment like from the executives? Are they cashing out while the hype is high?
That's a great question. The insider flow data in this analysis is particularly revealing. In the fourth quarter of 2025, Peter Thiel, one of the original co-founders of Palantir, was noted as actively selling off portions of his holdings in other major AI-related stocks.
Oh, really?
Yes, he was taking profits on massive companies like Apple and Microsoft.
Okay, so he's securing his gains in the broader tech market. But what about his shares in his own company?
The analysis explicitly points out there was absolutely no direct Palantir insider selling noted during this period.
None at all.
None. When a key insider and founder is taking profits in the broader tech and AI market, but aggressively holding on to their own company's stock despite a massive 144% run-up over the last year, it signals exceptionally strong internal conviction.
They really believe in what they're building.
The people who know the business best believe there is far more room to run. It aligns perfectly with the institutional accumulation we are seeing from banks like UBS and Citi.
That is a massive vote of confidence from the inside. But our job here isn't just to cheerlead the stock. We have to look at all the angles and protect your blind spots. So what does this all mean for the risks? If you're looking closely at this analysis, what is the bear case here? What could completely derail this momentum?
The primary risk, and the sources dedicate significant time to this, is the elevated valuation. Even after a 35% pullback, the stock is essentially priced for perfection.
Price for perfection.
Yes. When you trade at these kinds of high multiples, you are highly sensitive to tech sector rotations.
Priced for perfection is a great way to put it. It's like paying luxury mansion prices for a piece of vacant property today because you expect the company to build a mansion on it tomorrow.
Exactly.
If there is even a slight delay in the construction, the market is going to punish you severely. But when you mention a tech sector rotation, what does that actually mean for a stock price this high?
So a tech sector rotation happens when large institutional investors decide the broader economic environment is getting too risky. They move their massive pools of capital away from high-growth, high-risk AI stocks and rotate those funds into safer, more defensive assets.
Like utilities or healthcare.
Right, or consumer staples. If the broader market decides to rotate out of tech due to interest rate fears or inflation, Palantir's stock will take a significant hit, completely regardless of how well their software bootcamps are performing.
They cannot control the macroeconomic weather.
Nobody can.
So, if you're priced like a rocket ship, you really can't afford a single-engine misfire, whether it's your fault or the market's fault. How does the investment analysis weigh that massive valuation risk against the obvious upside we've been discussing?
The counter-argument provided in the analysis is that the recent 35% derating of the stock means a significant portion of this valuation risk is already priced in by the market.
The speculative froth has been blown off the top.
Exactly. Furthermore, when you have a company issuing concrete guidance for 61% forward revenue growth, they can actually grow into their high valuation quite rapidly.
Because the revenue is catching up to the stock price.
Right. Paying a premium price becomes much more justifiable if the underlying earnings are consistently doubling every couple of years. The sheer strength of their competitive moat and that 139% retention rate acts as a heavy buffer against competitive and economic risks.
Okay, so if you are keeping a close eye on this company, what are the specific catalysts you should be watching over the next 3 months?
There are a few key dates.
The analysis lays out a pretty clear calendar of events. The biggest one is undoubtedly the Q1 2026 earnings, which are expected to drop in mid-May. All eyes on Wall Street are going to be hyper-focused on whether Palantir can beat that consensus expectation of 60+% growth.
The mid-May earnings call is absolutely the main event. Wall Street wants to see if the bootcamp model is still converting at a high rate.
If they show any signs of slowing down on that AIP momentum, the market might punish them. But if they beat it again,
that could be the trigger for that technical breakout we discussed earlier. But there are other, more subtle catalysts to watch as well.
Like what?
The sources highlight potential new product reveals for the AI platform, specifically hinting at expansions into edge computing and the Internet of Things, moving the AI out of the data center and into physical devices.
That's a huge addressable market.
It is. There are also upcoming defense conferences where we might see updates on their massive expansions with NATO and the UK's National Health Service, applying their logistics AI to healthcare and international supply chains.
So branching out even further globally.
Yes. And then there is the rumor mill.
We always have to check the rumors. What is the whisper among the analysts right now?
The analysis notes unconfirmed but incredibly potent rumors circulating among top analysts about an internal path for Palantir to hit $10 billion in annual revenue by the late 2020s.
$10 billion.
$10 billion.
Yeah.
If Palantir's management starts formally hinting at a roadmap to $10 billion on their next earnings call, supported by the massive conversion rates they are seeing from these boot camps, that fundamentally changes the long-term mathematical modeling for institutional investors.
$10 billion would be a monumental milestone. Bringing this all together, what is the ultimate conclusion of this investment analysis? After weighing the explosive 70% growth, the 139% customer retention, and that brilliant bootcamp sales model against the very real risks of a high valuation and macroeconomic volatility, where does the source material finally land?
The final investment thesis gives Palantir a highly bullish score of 9 out of 10.
A 9 out of 10, that's definitive.
It is. The analysis paints the company as a definitive multi-year hold. The core argument is that Palantir is a true compounder, a business driven not by the theoretical hype of what AI might do someday, but by real-world adoption and measurable enterprise value today.
They're actually delivering the goods.
The combination of consistently crushing consensus estimates, massive commercial acceleration, and strategic partnerships positions them to capitalize on the global AI boom in a way very few software companies can realistically match.
It's truly a remarkable transformation to take a business model that was historically confined to the shadows of the intelligence community and successfully pivot that core technology to become an absolute powerhouse in commercial enterprise AI. It's astonishing.
It's arguably one of the most impressive corporate evolutions we've seen in the software sector in the last decade. The sheer scale of what they're executing, moving from government defense to mainstream corporate infrastructure, is unprecedented.
It really makes you wonder about the long-term ripple effects of this success. And I want to leave you with a final provocative thought to chew on today. We have talked a lot about Palantir's bootcamp model, where they bypass the traditional agonizing software sales cycle by actually integrating a client's own data and proving their undeniable value in just a matter of days.
The show don't tell approach.
Right. If this show don't tell approach is driving 137% commercial growth and completely upending their industry, how long will it be before this becomes the mandatory standard?
That is the big question.
As AI makes coding, integration, and deployment faster than ever before, will corporate buyers simply refuse to sit through months of theoretical PowerPoint pitches ever again? Perhaps Palantir isn't just changing what artificial intelligence can do for a business. They might be permanently changing how software itself is sold by forcing every single tech company to prove their actual worth before a single contract is signed.
It's a fascinating paradigm shift to watch unfold.
It certainly is. Thank you so much for joining us on this deep dive. We hope this look past the hype and into the hard numbers helps you navigate this rapidly changing technological landscape. Keep questioning the buzzwords, keep exploring the realities behind the AI boom, and we will catch you next time.